What's up, guys? Kanal here, Bulls on Wall Street. Guys, hopefully you guys are having an awesome day. The markets have been picking up big time to the downside, and so there's been a lot of plays to do. But today I want to talk to you about a special trading setup that I've been doing for years. And this is the perfect time of year to do it. So currently, we are in the middle of earnings season. Earnings season comes 4 times a year. It is where stocks announce their earnings and they are telling the world, right, what they've been up to and what they're going to do. And earnings season gives you awesome opportunities for making trades, not just the day of the earnings, like post earnings. There's a bunch of setups you can do for that. But I really like this second day plays. So on days when a stock's earnings come out, oftentimes they can gap up or down so much that, they may not have as much movement that day because the SSR is on and there's just nobody really left to sell and they just can't get it lower. But what I love is when a stock tanks and it gaps down big on these terrible earnings reactions, I love the day 2 play on it. So for me, my favorite day 2 play on this is a green to red on the second day of earnings. So I keep a list of all the big gap ups and downs, but in this type of market, you want to really focus on the gap down plays because the market's right in this terrible shit show. And then I want to play the day 2s and day 3s on this. So today, I had ENPH on my list. So I get on Zoom in the morning at 9 o'clock. We start going over all the plays and the watch list that I've made for the team. So yesterday, ENPH had earnings. It got pummeled about 20% or so. And I was watching it yesterday, and there was maybe one play on the first pop, but it just didn't really have that much juice. But in the morning, man, we got a gift, and it's a gift when it happens. So in the morning, man, the stock spikes up for just one candle, right? It's just one candle. Now, a lot of times what happens is because the stock is beaten down so much and the SSR is on it, people want to buy stocks because they're cheap. So they see a little green spike and people think like it's a bull market. You're going to get this epic reversal maybe. Hey, and all the value buyers will come in and all this kind of nonsense. But that very rarely happens in this type of market, especially on these type of stocks that are a little bit more unknown, not like your Teslas and Nvidias where everybody's kind of staring at it. So as the stock starts to spike up, like we get ourselves in a perfect scenario because now we've got the gift and we can go in for a green to red move and play that second day of earnings. So as the stock starts to roll over, I'm telling the guys in the chat room, I initially start shorting at 82.30s because that's right when it starts to roll over right to the red move. Now, it's a little bit early, about 20 cents. What I like to do that because a lot of times people will start hitting the market orders right when it goes green to red and they kerplunk too fast. And so I like to be in a little bit early. And now we have ourselves in an epic setup. And then we also have some ranges to play around, right? So I've got 2 kind of ranges that I know can speed this up, right? It's the 8140s and then of course the 8050s. And so we want to manage around this a little bit. Now, for something like an ENPH, you could just do the shares. I did the puts to get a little bit extra juice. So because this is at 82 and the old, right, kind of support down here is at 80, I want to do the 80 puts on these bad boys. And this is just a classic, right? Just quick momentum trade. When you're day trading these options, it's a get in and get out because once they go sideways, you start to decay on the premium. So as this starts to pull through, right, I'm starting to hit this thing on this candle. And so I had about a 160 average or so on the put. So it's pretty cheap, right? You can load up. If you get 20 contracts, it's $3,200. It's not a huge deal, right? Anybody can do that. You want 50 contracts, right? You're talking $7,500. Not a big deal, And so as this starts to go green to red, now you start to get the pickup, right? Like now it starts to really push into this. And what I want to do is kind of manage around the position and around those things. So I always like to take a little bit off the top into the first thrust, and then I take a flat trade. And the reason I do that, so I covered a quarter of this. The reason I do that is that you want to always pay yourself. This is not a market where you get the big home runs, where you're like holding for days and you get these trends and stuff like that. This is a quick hitters market. So the open is the open. So 9:30 to 10:30 is the open. So what's your hold time going to be if you take a trade at the open? Probably you're going to get out of it at least by 10:30, 11, right? So I want to take off a quarter, and then I'm going to scale out a quarter along the ways. And so I take some out right into this support over here, and then I'm scaling out a little bit into this support, and I'm just taking off a quarter along the way. And then, in the end, I kind of got out the last shares of this at 78.60s. And this is a classic. You got a downtrend, big gap down. You get that gift on the spike up, and then boom, right? You're coming in hot, and dude, this thing ended up running to about $5. I got out in the 78s, so a little bit early, couple bucks. I could have done a little bit better job kind of riding it down, but it's the same type of deal. Like, I do the same setup. I've been doing this on IWM for like the last 3-4 days, the last 2 days. And I've been doing it for a while. Like, you can see like something like even similar, right? You got IWM, you get this big gap up, and it just goes right to the penny, right into the previous resistance. And this is a downtrending name. It's no different than a bad earnings play, right? And so as soon as this pops into resistance, you can start to, roll this thing over. So, you can come in with, say, like a 163s or something like that. And you want to go in the next day on these kind of things usually, because they just decay too fast. So you can go in that same day, or you can go in the next day. But you can see like something like this, you go 26 to 132s. I always go 1 day out on these, unless it's Friday, because I just hate that much volatility on a Monday. It just gets a little bit crazy. So, I take the 160, the 163s, and you get this just nice, steady move into it. You can do this on any type of trade, right? This kind of gap fade, but it's best on earnings plays. And so, you want to, like, for maybe tomorrow, like something like this ON, right? This can be, right, a perfect setup like that. We shorted this at the open today, and kind of covered down into here, but then you had this big long base. So if this pops up in the morning, we want to start watching it for like a little bit of a rollover, right? AEHR had this big nasty dump today on decent volume, right? So like this would be a prime time setup. You've got some levels to trade around. If we gap up around here, we want to watch and see how this thing fizzles out. And so always keep a list of these kind of gap down plays. This is a classic setup, but it's working extra good right now because the market is in this bear market kind of action, right? The IWM is, right, taking a real big crapper, right? The S&P 500, if you look at the equal weight S&P 500, right, just it's been in a downtrend for quite some time. So, minus some of the big boys, all these things are trending down. So this setup works really, really well. So moral of the story, you get a bad earnings, a gap down, or some spike on some news, and then you're going day 2. If you see that spike up, then what you're going to do is fizzle that thing off on the green to red, and you can even do that on the indexes. I do the puts on the indexes on that all the time for a little bit extra cheese. And dude, the setup has been working. Right now, like the gap up longs, like, there are a lot of stocks that are having like earnings and stuff like that. Gap up longs, they're not following through as well because the structure of the market has changed. So guys, hopefully that helps. Smash that like button. Let me know if you have any questions. I always look forward to hearing from you. Take care.